Hello and welcome to today's episode of Proinvestor Insights, the podcast where we dive deep into the latest earnings and market updates to empower our investor community with clear, actionable insights. I'm your host, here to guide you through the recent earnings results of Adani Ports and SEZ, one of India's leading players in the logistics and port management space. Whether you are an experienced investor or just starting out, Proinvestor AI is here to help you make informed investment decisions through our comprehensive financial platform. Earnings Overview. Adani Ports and SEZ has reported a solid performance in the second quarter of FY25, with several key metrics that highlight both the company's resilience and growth potential in India's expanding logistics sector. Revenue for Q2FY25 grew by 6% year-over-year, reaching 70.7 billion Indian rupees, driven by a significant increase in cargo volumes, up 10% year-over-year to 111 million metric tons. This growth is largely attributed to the robust container segment, which saw a remarkable 19% year-over-year growth. EBITDA and margins. The company posted an EBITDA margin of 61.8%, exceeding expectations and reflecting a 90 basis points improvement compared to last year. EBITDA itself rose by 13% year-over-year to 43.7 billion Indian rupees, signaling operational efficiency and strong demand. Adjusted PAT. Adani Ports reported an adjusted PAT of 24.6 billion Indian rupees, marking a 10.9% year-over-year increase. The steady growth in net profit aligns with revenue growth and continued focus on high-margin businesses. Operational highlights. The company's Mundra port continues to be a significant contributor, handling 50 million metric tons of cargo this quarter, a 12% increase year-over-year. In fact, Adani Ports now manages around 27% of India's total cargo and nearly 45% of the container segment, reinforcing its dominant market position. Additionally, logistics revenues surged by 22% year-over-year, though margins were slightly lower in the logistics segment at 27%, down from 30% in Q2FY24. Expansion and acquisitions. Adani Ports has made strategic acquisitions this quarter, including the Gopalpur port and an 80% stake in Astro Offshore, which will enhance its logistics capabilities by adding 26 offshore support vessels. This acquisition is expected to contribute positively from the second half of FY25. Moreover, the Vizhinjam port is anticipated to become operational this month, with full capacity utilization expected by FY26. Growth projections. Looking ahead, Adani Ports projects its cargo volumes for FY25 to fall between 460 to 480 million metric tons, along with an EBITDA target of approximately 180 billion Indian rupees. The company aims to capture a larger market share, especially in key commodities like iron ore and fertilizer. APSEZ has also managed to bring down its net debt to EBITDA ratio to 2x, indicating strong cash flows and a controlled leverage position. Valuation and recommendation. Analysts have retained a positive outlook on Adani Ports, with a buy rating and a revised target price of 1,780 rupees. This valuation is based on an 18x EV/EBITDA multiple, with expected revenue, EBITDA, and PAT growth rates of 15%, 15%, and 21%, respectively, over FY24 to FY27. That wraps up our detailed coverage of Adani Ports and SEZ Q2 FY25 earnings. As always, Proinvestor AI is committed to equipping you with essential financial insights to help you navigate the stock market with confidence. If you are keen to explore this analysis in even greater depth, the complete earnings ConCall is available on our YouTube channel. We encourage you to stay informed, stay invested, and let Proinvestor AI be your partner in smarter investing. Thank you for tuning into Proinvestor Insights. Until next time, happy investing.